Hello, everybody. Welcome. Let's get started right away. Dow Jones is up 6%, Nasdaq 9%, S&P 500 7%, Russell 2000 up 7%. All sectors are green today. Crude oil is up 5% to $62 per barrel. Treasury yields are also up about and also flatter. 5-year Treasury yield is up 19 basis points. 10-year is up 15 basis points. 30-year is up 10 basis points. Let's look at the 2-year yield. Up 20 basis points. 2-year yield is up 20 basis points. Interesting. Let's read our article. Obviously, I think everyone knows what's going on. Trump extended it paused the tariffs for 90 days, except for China, and also except for the 10% base for all countries. And there's obviously short squeeze going on in the markets today. Let's dig into it a little bit more. Please let me know how the audio quality is on YouTube. Give me 1 second. I think everything should be fine on YouTube, but let me know if you had any issues on audio quality. All right. Let's go through this. Major stock indices shot higher on Wednesday, with Nasdaq last up 10%. After US President Donald Trump said he had authorized a 90-day pause on many of his reciprocal and 10% tariffs effective immediately, even as he raised them on China. The US dollar, which had been lower earlier in the day, strengthened against the yen and other currencies after Trump's announcement, while Treasury yields paired gains after an auction of 10-year Treasury notes saw strong demand. Trump declared a 90-day pause on reciprocal and 10% tariffs that he had unveiled initially last week, while raising duties on China. Yeah, I thought the 10% was still on everyone. Let me find a second source for this. Because that would be misreported by Reuters. 10% tariff on most imports into U.S. remains in effect. The baseline tariff was implemented April 5. However, there have been a recent adjustment to this policy. On April 9, President Trump announced a 90-day pause on additional tariffs for most countries, maintaining the 10% baseline rate during this period. Yeah, this is misreporting by Reuters, because Reuters says Trump declared a 90-day pause on reciprocal and 10% tariffs that he had initialized. That's wrong. Okay, let's continue. Trump's unveiling of sweeping tariffs late last Wednesday had rattled markets, with stocks selling off sharply in the days following the announcement. This was definitely a surprise, considering that the administration coincidentally said they would not back off the tariffs and that they were non-negotiable, states Suchnik, chief market strategy Interactive Brokers in Connecticut. That said, the magnitude of the rally shouldn't be surprising. He said, "This is very understandable relief rally." Machine, how are you? How you like this rally?
We talked about a few days ago, Monday, and I think that was a up day on the market, and I had, I can't remember. No, it was yesterday. So we talked Monday, and yesterday the market, it started with a push upwards, and I started reducing my positions that were long, and then I regretted, based on the subsequent plummet, that I didn't do more. And I just got back from a nice long trail run, very sweaty, tan, ripped, and come back to see this announcement and looking at the details, which you just reaffirmed, I believe, which is everyone's celebrating except there's still a 10% tariff on, correct?
Mm-hmm. Mm-hmm.
And as soon as I saw that, I was like, oh no, I'm exiting most of my longs. Not that I think things are going to be really bad, but the 10% tariffs, as we discussed, and you were confident 2 days ago, is going to lead to, I don't know, a recession, but definitely a slowdown in earnings growth. And I just think uh, it's not like, Nasdaq is cheaply valued, and if earnings flatline or go down, like this is not a bull market. So I'm shorting a little bit too. So I'm kind of probably delta neutral. I don't know right now. I have to think about this more. But that 10% tariff is the key thing to me still. And he's sticking to China, right? There's still more pushback with China. And that can't be good. I'm sure though, if China and the US come to some agreement over the next weeks or months, like that would definitely rally the market further. But I don't know. This seems to be an overreaction.
Okay, let's continue. What do you think will happen next? So you're shorting. What are you shorting?
I mean, I'm just mostly index funds like QQQ.
Really?
What do you think?
Yeah, I think the 10%. There's obviously a short squeeze going on here right now, and the 10% tariff I think is problematic still. But yeah, I think there's a recession coming.
Oh, Tesla is up 20% today.
Oh,
That
I
might be
bought some.
might be a good short.
Yeah. Um, Magic. What do you think?
Hey, just jumped on. We're talking about just the market in general, or
Whatever you want to talk about.
yeah, I mean, it's just a bear market rally. These are very tough. A lot of the stuff, structural stuff, is in play. This is probably to reel in some more retail people thinking it's over. Japan's having a lot of issues. We have issues with China. I mean, liquidity is an issue. So this is a suckers rally. I mean, I'm gonna reshort at 5,500. I took most of my shorts off. 80% of my short, I'm pretty much 80% in cash. So this is a good day to sit back, let everybody buy, and then at 55, 5,600, I'm going to reshort.
Okay. Machine. Is there anything else I want to talk about?
I mean, that was the main thing. I wanted to get your take on this news, which I think. I mean, what do you thought? We talked about this on Monday. I think 10% tariffs alone is enough to slow down the global economy. Is that your thought?
Yeah, I think the economy was slowing down even before this tariff war started. So yeah, I mean, that's what data shows, right?
Well, what do you think the effects of a 10% tariff are going to be by itself?
All else equal, inflation will be higher than otherwise. GDP growth will be lower than otherwise. There's also some permanent impact from this, uncertainty, tariff war, basically. So yeah, I think the Fed stays where it is for a while. I mean, this morning, the probability of a rate cut was up to 60% in May, even though they've been saying they're not going to cut. So I think we're not really going to know the impact of this for probably a year, the tariff war. And I think, you kind of have to, this is one of those moments where you have to do your due diligence and in the fog of war, make some decisions.
Hey, yeah, I mean, yeah, I was going to say the bear market rallies are the most vicious. So there's big fake outs during a drawdown period, and tariffs are a really nice cover story. There's a lot happening under the hood doesn't have to happen with tariffs. If you look at the Nikkei and you look at the bond market is, even though today was a pretty good auction, we have to refinance a ton of debt, and yields are not where we want them to be. So if you look at Japan, if you look at the bond market, a lot of our problems are not solved all of a sudden because it's tariff. was removed. It will. The stock market's going to bounce for sure because there's a lot of short covering, short squeezing, and just a lot of pent up demand to push this thing higher. So, well deserved from the bulls, but I wouldn't necessarily celebrate it too much. Big jumps up and down, up or down, really, really fast are not healthy. So they usually tend to reverse as quickly as they go up. So.
Okay. I was actually busy when the news came out. I didn't even really get a chance to review all the news. So let me just go through this. And I see Meta, if he wants to come up too. Let me just go through this article real quick. Many investors have been worrying that Trump's wide-ranging tariffs could be severe enough to trigger a recession. Stocks have been higher on Wednesday before the announcement, and U.S. indices added gains following the Treasury auction. MSCI's gauge of stocks across the globe rose 33 points, or 4.5%. Against the Japanese yen, the dollar strengthened 1.25%. The yield on benchmark 10-year rates rose 17 basis points to 4.43. And that's that. Yeah, man, I'm a little surprised they made a mistake here. I wonder if they fixed it, but that's wild. That's a massive error by Reuters. Pause intends to allow time for negotiations. Notably, imports from China are exception to this pause. Tariffs on Chinese goods have been increased to 125%, up from previous 104%. Machine, is it correct that Tesla Energy imports all of its batteries from China?
Yeah, I believe so.
Do you think Tesla? Do you think Elon will get an exception here?
I don't know.
Oh, you know what? When I asked you, you said China has the staying power. Meta said US has the staying power. So I would love him to come up and maybe discuss it with you. Who will come out the winner in this tariff war with China? Besant agrees with Meta. Machine, so disagrees with you. Besant says China exports 5 times to us than what we import to them. So they have a lot more to lose from the tariff war. So Meta Besant agrees with Meta. And Meta said China can't replace the US consumer. So what do you say to that, Machine?
I think it's a good point. I'm not trying to be stubborn in what I thought. My position is not on the aspect that I think a standstill wouldn't cripple China more. I just think China has more control over their decision making in a more authoritarian sense, in where complaints by citizens on a recession or things going bad can be ignored for longer. In the US, there's already so much pushback about what Trump's doing. And part of the reason why, some of the decisions he makes, like delaying tariffs and whatnot, are because people get upset and politicians are probably pinging him. And the US just the Americans just have no patience for this sort of stuff. And the Chinese, they may not have the patience, but their government won't care. And so I think that's a real point. Now, how much does that matter compared to how much worse it would be for China than the US? I think that's a fair discussion to make, that maybe indeed the economics would be just so much worse for China that would overwhelm it. That's a reasonable point.
Machine, what do you think? I mean, Meta, what do you think?
I'm not sure that was my. I'm not sure that was my position, Iman. I just got the last end because of the 5-second delay. I'm not sure what my position is on that is being represented, but I tend to agree with what Machine just said.
You said China can't replace the US customer, so US has better staying power, right? Because when we talked about the Machine, yesterday, the day before, Machine had said China has the more staying power here. But now he switched his position.
No. Yeah. I agree with the way you just summarized it. Yes.
Mm-hmm. Yeah. What do you think of this news?
I'm happy. I think I was in this space earlier saying I want US to be a net importer. I've been in some spaces and I also just posted like things to help people think it through. Like if you have two options of being a net importer or a net exporter in times of peace and in times right before war, I think you want to be a net importer as long as your employment is staying high and critical goods are still being made at home.
Okay. And are you changing your positions at all?
As you know, I've been buying. We're getting close to the point where I stop buying. So at the moment, my change in position should do nothing and wait. I know you consider that to not be a position, but I think for now I'm just waiting, gathering data, and I'll make a decision as to what to do. But if the stock continues to rally much, much more, I'll probably start selling some of the position I acquired recently.
I'm surprised that you're not buying at these levels. Like if somebody asked you 3-4 months ago, if Tesla drops to 260, would you be buying? You probably say yes, right?
I mean, there's a difference between when I say I'll buy under 280 because my price target is 280, 360 to 280 is okay. There's a difference, but it's not like as big of a difference as it was like a few days ago when it was down another 20%.
Why is your price target 280 if you think robotaxis are coming?
We could went over this. I basically said I think the profitability per car of $5,000 with 5 million cars and a 30 PE is reasonable. So that's where I'm getting my price target from.
Okay, and you don't think a recession is coming, right?
Yeah, I still kind of hold that there won't be a recession. I think a self-induced recession, like if some catastrophic event happens that I'm going to say is unpredictable, not because the president did it, but because like natural disaster or something like that, or a pandemic or war that is not provoked by us. I think those are exceptional. But barring any of that, I don't think there will be a recession.
Okay. All right. How
If
do you feel about
anything,
how do you feel about
if it-
Tesla Energy since Tesla Energy is importing all the batteries from China?
I think they'll be fine. I think in general, if anything, what this shows us is maybe if they have import uh, encouraging of imports through the reduction of tariffs, like just they went one direction, it didn't work well. Why don't they go the other direction, which any macroeconomist would have told them in the first place, which would have deflationary effects, and that could get them to the interest rate cuts that they want so bad.
Machine?
I mean, obviously, this is highly volatile situation and things may change quickly. But assuming these tariffs on China stay, I don't know how you could think Tesla energy margins for mega, and which is predominantly megapack driven, could stay anywhere near where they are. I mean, these tariffs are 100%, 80%. What is the number now? And the cost of the cell is not the entire cost, obviously, the battery, but it's a pretty significant cost. And so I haven't done the calculations, but I'm pretty sure if you double the cost of this cell for a mega pack, the margins are going to be trash.
Remember though that before they cut the prices, they were still selling the mega packs at higher prices. You can argue they had to lower prices because others were lowering prices. So if you don't have to compete with foreign imports, the market is different.
Yeah, I mean, I get that you're saying, there's less competition, so that by itself will you can increase price, but I don't know. My guess is that doesn't offset.
The question is like, if your break even on a battery pack as a city is, I don't know, 7 years versus 14 years, is that the decision maker? Or is the decision maker that you need to actually have electricity and there's no real power source nearby, but you have excess power that's being wasted. And so you can just get this thing and have the power.
Now you're just going into some sort of rhetorical questions, like you're getting away from actual quantitative data that there's demand.
That is quantitative. That is quantitative.
There's demand at certain prices.
No,
Okay?
no. I'm making the argument that government demand is not always price oriented.
I think that it is predominantly price oriented. Not totally. I agree. There's some price sensitivity. Do you think Tesla reduced the price of the mega pack to be nice?
No, they did it to be competitive.
So there was some sensitivity to price.
Right. So there were foreign providers of packs that could provide it for cheaper.
Yes.
So if you remove them from the market, then price elasticity says they can go back to what they were charging before.
But you were saying that if those competitors are not there, the price the companies would be willing to pay to purchase these, they still would have been willing to pay a higher price because it would still have been profitable to them.
Yeah, you're thinking companies. I'm thinking
Yeah.
like governments. So if you
Governments,
have a
right.
need,
Right.
yeah, so let's say you have a need, you have a base need. I'm just going to make up units here. You have a base need of 10. When prices are great, you can buy up to 40. So you'd be like, oh, right, prices are great. Let's buy close to 40. But if prices are terrible, no matter how bad the pricing is, you still need to buy 10. You'll go out there, you'll hold your nose and you get the 10. And you'll apply pressure to the government to be like, yo, get these prices down. Right. It's kind of like
Yeah.
gasoline. It doesn't matter how expensive gasoline gets. Gasoline could get to $20 tomorrow. People won't drive. Demand will drop, but it won't go to zero.
I get what you're saying. I think that could happen some. I still think people would hold out, especially if they don't trust that these tariffs are here to stay.
I
If
agree.
like,
I agree.
This might
I
be a
agree.
year tariff. They're like, I'm not going to buy this thing
Yeah,
for
yeah,
double
yeah.
the price.
If it's temporal, if it's believed to be temporal, I agree with you.
Yeah.
But if they kick out, if they say foreign countries are not allowed to sell batteries in America, that may not be considered temporal. That might just be like, oh shit, that might just be permanent.
Okay. What do you guys want to talk about? Lachie, did you see Green Deal on this tweet? What do you think about that? I mean, I guess that's not really in your wheelhouse.
I have not. Is this about him and Meta talking about?
Yeah,
Model
we
size?
ended up agreeing, despite Yaman, I think, you representing he was of a different opinion. The conclusion is, at least from RAM and compute, there's no reason why hardware 3 can't perform like hardware 4, with the caveat that hardware 4 would have a shadow mode and hardware 3 would not.
Just give it up, man. Oh my
Well,
God.
he thought you
Oh.
needed to talk from one side of the PCB to the other side of the PCB over Ethernet. Come on, man. Those are not the things to draw conclusions from. And he backed
Everyone
off of
knows
that.
Hardware 3 is dead. You lost. This is embarrassing at this point. You lost.
No,
Talking about Hardware
nope.
3.
The engineer does not quit when the facts are on their side.
So, Meta, you do think hardware 3 is going to get level 4 driving, basically, still?
I still believe hardware 3 is capable of it. Whether they do it from a business standpoint or not is a different discussion.
So you can't be disproven, basically.
No. Someone could take the hardware aftermarket and put it on there if they really, really were motivated to. And I think
would you do with it?
Financially, it's
that
profitable for them to do that. It's financially profitable for them to do that.
Okay.
I mean, let's see. If Tesla gets like up to 800, 900, fine. I'll go ahead and just mess around and do it. How about that?
Okay. Sounds good.
Assuming they don't do it themselves.
What do you guys, Machine, what do you think about the new Model Y? How demand is shaping up around the world for the new Model Y? Are you going to get one?
No.
Did you get your wife a new Model 3, like we discussed?
No, she doesn't want one.
She doesn't want. Why? Did she vote for Kamala Harris?
No.
Can we talk Titans for real quick? I have to go soon. I just want to get machines taken. I don't think we've had a chance to discuss
sure.
space.
Go ahead.
Machine, have you had a chance to look at the Titans paper?
No. Tell me about
it. Oh my God. Okay. You had so much time. I thought you would have read it by now.
I had so much time. What is this time? What is this time you speak of?
Since December 31st, I sent it to you as soon as it came out. I was like, read this thing. Yeah, I said this is the next best thing since Chinchilla.
I haven't been on. I'm not on Twitter much, so I have to go back and look at my.
I should have just made a machine mom joke, and then he would have seen it. Because if I do that on the timeline, he sees it.
If he hasn't read it, there's nothing to talk about. So,
no.
Machine, what do you think about the demand for the new Model Y around the world?
I don't know. It's hard to say because I think, in the U.S., it's only the high-end one that they've been selling, and that there's no wait time basically to get. But I think in Europe, that's not the case. That it's not the highest end, like high trim, expensive version. I haven't been following in China, so I don't know. to me, it's hard to say. It's not clear to me.
Well, Tesla started the long-range all-wheel drive now as well in the US, so it's not just a launch version. So we have that data, and I don't think the wait time is very high on it. So you have no thoughts on it. Meta, what do you think about the new Model Y demand so far around the world?
I think it's telling that they're canceling some of the orders, right? And forcing people not to get the launch series.
That is wild. That's
Yeah,
really
it's quite
wild.
surprising.
Mhm.
They must have made some calculus of, look, we have more than enough demand. Okay, one of two ways you could spin it. We have more than enough demand for the other version. We don't need to keep this line running.
There's no way to
Or-
spin it. They fucked over the people who ordered that model.
No, it depends. It depends. There are
They
people
are
who made that.
charging them higher.
No, they're not. They're not
Mhm.
charging them higher. They're giving
Mhm.
them a lower price, aren't they? Isn't the launch series more expensive?
Without the FSD, it would have been higher, right?
Without the FSD, the price would be higher in the launch series.
No, if you added FSD, it would have been higher than the launch series, isn't it? So if you want FSD,
Yeah, but we don't know
Right.
that they're not respecting that price for them. They're just not giving them a launch series.
now what I heard is that they canceled orders. Yeah,
No,
so you're telling me that even if somebody gets the new one, non-launch order, but still wants FSD, Tesla will give them the same price. Is that what you're saying?
Yeah, my prediction is that they would be the same price. But let's say it's not the same price and they're fucking over some customers. That's a
Mhm.
horrible policy, but that suggests crazy confidence, which again I don't support. I don't think they would do that.
No, I
but
think
they
I
shouldn't.
think I think it's cost driven. I think it's because of these tariffs. I think they know their gross margins are getting squeezed, and these tariffs will make it worse.
That's a strong argument. That's a strong
Mhm.
argument. So your argument is they use the tariffs as a reason to cancel the orders, and now the tariffs basically went on pause. Do you think they go and revive those orders?
Well, they're not really on pause, right? So the 10% on all countries is still there. The parts and the batteries coming from China are still getting tariffed at even higher rates. And the parts that are paused could still end up, becoming true, depending on the negotiations in the next couple of months. So the only thing that we know now is the uncertainty will continue. The 10% base tariff, like we speculated here, is going to stay. And a couple of other car makers have raised their prices in response. I mean, if you look at Ford today, Ford stock is still in the doldrums. It hasn't really bounced like some of these meme stocks. Ford is still at 950.
Maybe that's because Ford just sucks. Like I think people are going to rush to things that are
But it doesn't
benefiting the
suck
most.
anymore. It doesn't suck
No,
any more or less than 1 week ago, right?
Oh, it does. In an environment where you need to be able to adapt quickly and modify your supply chain quickly, Ford has proven it's not good at it.
Yeah, I mean, I guess that's an argument you can't have. But anyway, the point I'm trying to make is this short squeeze is obviously a meme stock phenomenon, and some of these price changes by Tesla canceling orders is to
I mean,
protect the gross
you
margin.
can call it a meme stock phenomenon, or you can call it a short stock phenomenon, whatever you want to call it.
Yeah, short squeeze / meme stock. But what I was going to say is, what do you think is the probability that Tesla faces a negative gross margin in the coming quarters, sometime in the coming quarters? Meta?
Not sure.
Not sure? Machine, what do you think? What's the probability that Tesla faces a negative gross margin sometime in the coming quarters
On automotive,
overall?
what is their overall gross margin right now? I don't know if do they compute overall. Just like auto margin's been what, like 12, 13%?
Well, it's mostly auto margin, right? Because the energy business
Yeah.
is so small.
Yeah.
But you can give me two probabilities, one automotive and one overall negative gross margin probability.
I don't I don't have enough insight into the financial, like doing a sensitivity
Mm.
analysis to understand.
So
how
you're
much-
not saying either. Meta is not saying either. Interesting.
Well, you're asking us to predict what the president, who's shown the ability to do crazy shit, is going to do.
No, I can't give you an assumption. Just do 10%, just the current state of events, 10% on all tariffs, and maybe something higher for China. Or you can assume that for China if you want to.
All right. Well, I don't know exactly what percent of cost of in the U.S. a Tesla made in the U.S. imports some parts from Mexico and Canada. I don't know what percent that is, and so if you apply 10% tariff, the COGS on the average Tesla in the U.S. is, what is it, like 40K or something like that? If obviously you're not getting a 10% on that 40K totally, right? That would add
Mhm.
$4,000, but maybe are you getting another $1,000 in COGS per
Yeah,
car?
it looks like it's more like a couple $1,000s per unit. Yeah.
So, I mean, that's quite a it's quite a hit. I think you would have. I don't know. That's what I'm saying. I have to do the math. Like, what is the gross margin right now? Let's say it's 12%. If I approximate it to 10%, that means they're selling gross margin. They're selling something for 44 ASP, and the COGS are 40,000. And now you're having it. So I could see gross margin going down to like 5%.
Mhm.
That's just like a total wild guess. Just quick math. But zero would have to induce this ASP going down
Mhm.
through demand issues, which I believe.
It would also require them to do a reversal on the auto parts are exempt. Right, the auto parts are exempt from most tariffs. I believe all tariffs.
Are they? Oh.
I don't.
Yeah,
I
there was
don't
a
know if
there was a carve out when they made the big announcement with the giant poster boards.
I don't know if it's that much of a blanket. I think if it's like complying with this and that, then you're exempt. If you're not, then you're not, kind of thing.
Who do you think
But
wrote that?
my understanding, it's not Elon. My understanding is that even suppliers who are not directly impacted by tariffs do end up raising their prices as well because they can in the environment. So, that, I mean, these are the kind of things that's going to play out over the next year. Probably, we're not really going to see the impact of, like, we're never going to know what the exact impact of tariffs are. But all else equal, it's going to be higher inflation, lower potential growth, and more probability of a recession and stagflation. But we'll see. We'll see what they do in the Congress for tax rates as well. So there are a lot of moving pieces, obviously, but I don't think people appreciate how bad Tesla's fundamentals are right now. It's not really about tariffs. It's not really about this and that percentage on tariffs. Tesla's fundamentals are bad. People don't want EVs; they want hybrids. Tesla will never produce a hybrid. Robotaxis are 5 to 10 plus years away. Nationwide adoption of robotaxis are 5 to 10 plus years away, despite somebody in the audience, Tesla Yoda, predicting that they were going to be online in 8.8 nationwide. I think he predicted. So those are the fundamentals that Tesla's facing. It's not really about the tariff rates.
I mean, it's easy to be wrong when you make predictions with dates. It's easy to be right when you just make forever predictions. So,
Mhm.
if you want to make predictions with dates, I welcome it.
Yeah, sometime in the coming quarters, I think.
That was such a not a date.
Yeah. Well, that's the only thing I'm willing to give you. So, but you can't take it or leave it.
I think you shouldn't make fun of Yoda and others, including myself, about making predictions with dates until you're willing to do the same.
Okay, sounds good. Sounds good.
Back to think about the
Yeah.
fact that when I predicted no robotaxis until January 2025, I was mocked and laughed at.
Mhm.
Yeah, you were
Mhm.
right, and you were correct.
And I'm
I don't know if you were.
still wrong. I'm still wrong, right?
Mhm.
Are you wrong?
I was past what I predicted. right?
Yeah,
It just wasn't as egregious as some other people.
you were less wrong. Yeah.
Gotcha. So, but you were less wrong, but you had less reasons for being right.
Oh my god.
Right? They literally switched from V11 to V12. That's what
Oh
fucked them
my
up, in my
God.
opinion. Read the Titan paper, machine, and then come back to me and read Titan. Think about how they're doing
First of
V11.
all,
Remember
you
that they
tried
have
to
2
mock me,
chips, and
and you
then
didn't
come
even
back.
send me the paper. You
Oh, I
came
sent
on
you.
here.
I sent you the name of the paper in a space. You could have looked it
You
up. You
sent
know how
me
to
a
use
link to
Google.
a space. Just said Titans. I don't know. He's watching some
You,
old
you don't know how to
football
read.
movie or
You can
something.
look
Remember the
things up.
Titans? Like, what am I? Give me a break.
All right, fine. I'll give you that. I didn't spell it out to be like this paper's really good and you should read it. I'll accept that.
Okay.
Anyway, Yaman, I'm not
Yeah.
regretting the Tesla purchase as you said I would regret. Let's just leave it at that.
I don't think I said you would regret them.
You did on the timeline. You said you might regret these purchases.
Well, that's different than you will regret them, right?
Fair. Well, I'm not miting.
Mm-hmm.
But I agree that it is still going to be volatile for the coming future. Do you think? I have a question for you. Do you think what's his name? Narado, whatever his name is,
Mm-hmm.
he gets the boot?
I think it looks like Besson took over, and he might, yeah.
That's
But
amazing news. I love that. That's great for this market.
but yeah, I mean,
I'm just saying, somebody who doesn't know that.
who was that guy, Steve Bannon, right? I mean, he was also like a very loyalist kind of thing, and
Yeah,
he kind of
yeah.
got pushed out. And I think Trump, I mean, yeah, Navarro
I
can
think
get
Trump.
it. Yeah, you're right.
I think Navarro said to Trump, "This is my guess. We're going to increase tariffs. Market's going to love it because we're going to pay down the debt, and interest rates will go down on the treasury yields." And the opposites happened of everything he said. And Trump probably looked at him and said, "You don't understand how macroeconomics work, and you're supposed to know how it works. So I'm going to go with the guy who said the opposite."
Mm-hmm. But that would be basing your decision on one data point. Right.
Multiple data points, right? He let the markets play it out for a few days, saw how the data points worked, and he listened to a bunch of people saying like, "This is why it's not going to work," and he goes, "Oh shit, that was probably a mistake."
Yeah, I don't know. I mean, I don't know. I'm not really opining on which one is better or not. I think they're kind of across the board a little lunatic right now. Besson seems to be the least damaging one for markets, but I mean, fundamentally, there's really nothing that's calamity about tariffs. It would the world will still turn,
I
but
disagree. I'm willing to argue that tariffs are a bad idea.
inflation rate would increase than otherwise, and potential growth would decrease than otherwise. But it would still turn, and they will with this 10% tariff rate. You kind of just said, we'll see where the chips land.
Yeah,
But
tariffs slow down economic growth. Wouldn't you agree with that?
yes, global potential growth slows down. Exactly.
What about just American growth?
Also, exactly.
Yeah, exactly. So I think
But
for that reason,
but
would
but
you agree that cutting tariffs would cause more growth?
all else equal, yes. But the problem that you have is things like COVID, where you need your manufacturing sector and
Agreed.
you don't have the supply
Agreed.
chain.
Agreed.
And with if imagine for a second you're in your Tesla shoes and you depend on batteries from CATL, like literally without them you don't have a business. And these tariff wars go into a war, you're fucked. You're fucked. Your $1 trillion valuation just disappeared overnight. And that's where this was heading. I don't know if you realize that. So
No, I
you
mean,
can argue about the inflation rate being maybe 0.2, 0.3% lower than otherwise, or global growth being 0.1, 0.2% higher, but you're also not protecting against those tail end risks. So it's not that black and white, is what I'm trying
no,
to say.
it is more black and white than you're making it sound. If you want to have the caveat, and I agree with this caveat, then you need to have sufficient onshore capacity in the event of a pandemic or in the event of a war. I agree that should be necessitated, but the United States government achieved food security through subsidies, not tariffs, right? Tariffing prevents others from doing. It doesn't encourage internal national doing. The United States government subsidizes corn, subsidizes different things that encourages excess production in the United States. If we want to have excess production of masks, if we want excess production of weapons, if we want excess production of batteries, various other things, the United States government has to be a buyer. I think that's the right way to fix it.
Okay. Yeah, I mean, I don't really care. I think there's a place. I mean, I think Besson says this too. I don't know where you disagree with it. There's a place and time for tariffs if you need to prioritize certain things. But the fact is, like, Tesla's dependent on its batteries right now. Do you disagree with that?
At the moment, I agree that they depend on batteries, but I
Mhm.
disagree that that dependency will be sustained because they are in the process of onshoring more and more of that. Now, they were depending on USMCA to get some of their lithium from Quebec, but I disagree with the idea that anything that's sufficiently complex will be 100% onshored.
Mhm.
Because, like, even coffee, it's gonna be
Oh,
difficult to onshore, right?
1 second. One sec. Okay, sorry about that. Okay, cool. Do you think so? CATL CEO said 4680 will never work. Do you think he's wrong?
You said it really fast. Can you say that again?
CATL CEO said 4680 will never work. Do you think he's wrong?
Yes, I think he's wrong.
What gives you confidence?
We already have cars out there with with 4680s in them, made by
Yeah,
others.
but what he means by it won't work is commercially viable.
I think he's wrong. LFP 4680s will work just fine. The form factor has more to do with heat management and structural integrity. The contents is different. He might have been talking about 4680 without LFP.
Okay. When do you think we'll have 4680 LFPs in Tesla vehicles?
I think the anode cathode delay is like what, 5-6 years usually. Has that Texas refinery even come up? No. So 3-4 years still out, as much as Tesla bulls may want it faster.
Mm-hmm.
Because that started what, 2 years ago, right? The groundbreaking of the refinery.
Mm-hmm. Yeah.
And the core difference is they're going to do electrolysis to speed it up, right? They're basically effectively boiling the water, but they're not really boiling the water, but they're using that process to remove the water from the brine faster. Um, Great idea. It just makes your lithium more expensive. However, with tariffs and stuff, it might actually be parity, right? So it's actually more viable now than it was before,
Yeah.
especially because their
Okay.
competitors' prices just went up too, right? It's ICE vehicles will get far more expensive than battery vehicles are already expensive, right? But the ICE vehicles
Yeah.
will skyrocket in price. We saw this like last time there was COVID. We saw $10,000 to $20,000 markups.
Mm-hmm. That was because of demand driven impact.
Well, lack of supply though, right?
Yeah.
So it's not demand driven; it was lack of supply driven.
Well, demand surged and supply couldn't keep up.
You're saying during COVID there was people buying more cars, not that there was less cars being manufactured and brought into the United States.
Yeah, there was a massive wealth effect. Demand for personal transportation increased with COVID, and rates were very low. People were given a lot of money, and they
Got it.
had
Got it.
money.
Got it. I had that
Mhm.
backwards then. Okay, I thought it was a supply shock, not a demand. I thought there was a chip shortage and like a bunch of other things, and like the Swiss Canal got stuck, and like vehicles weren't coming onshore for a while.
Mm-mm. And okay, cool. So you haven't changed. So after today's news, you haven't changed your intrinsic value estimate for Tesla. 260, right? Are you there?
Yeah,
Okay. But we're at 270 right now. So
I mean, What's your point?
I got no point. Just saying. You're saying it's overvalued. Wow.
I'm
Are you
not
gonna go
saying it's
short?
overvalued. I didn't say it's overvalued.
It sounds like you said
Look, okay,
260.
hold on.
It's 270.
Hold on, hold on. Look, there's this thing known as transaction fees and friction, right?
How much
If you
transaction fees are you
wait,
paying? 5%?
there's a mental exhaustion. Like there's like I'm not gonna buy it at 280.01.
Robinhood has $0
I'm not
trades
gonna
nowadays.
sell at 799.99 and then sell at 280.01. Like what are we talking about? It's not a fixed number like this. You have to have a gap.
Yeah.
You also generally are going to try and time things. Like on a green day that's as green as today, it's not the day to buy for me. I'll wait. I'll happily enjoy the appreciation and see how far it runs. If this thing keeps running, that's amazing. That's great. I'll start selling when the decumulator starts offering close to 450 or 600 or 700 like it did at one point.
Yutzi, how are you?
The market's changed a little bit since we spoke last 12 hours ago or 15 hours ago.
Was it? No, I think it was Monday night, right?
On that last, it wasn't. Oh yeah, you're right. That was 2 nights ago. I was thinking that was
Mhm.
last night we spoke. But
That's okay. I know you think about me every single night. So, what's your take on the news?
I think that like this was somewhat expected that I was kind of calling for a relief bounce, and I mean we saw several times throughout the week, just even the last 2 weeks, anybody even hinting that there might be a pause in tariffs would cause a huge jump in the market, and I'm sure Trump will frame this a certain way, but I mean he blinked first, so.
I mean, he totally bailed, and like everyone predicted, his claim of victory. And Besson's like, this was planned all along. I don't think so. But what else is he going to say? Obviously,
This is the thing I keep trying to point out to people who are like super Trump loyalists in this situation. I agree. This gives him negotiation leverage. Tell me what the hell he's negotiating for. Like, if you can't name what he's negotiating for, and then you can't make an argument for why that's a better thing, then we're not in a negotiation. We're in a shooting ourselves in the foot situation. And anybody who says we want 0 for 0 tariffs, I would argue that's worse. I actually would prefer to have tariffs on American goods going to other countries while having no tariffs on other goods coming to our country, because that means we're a chief importer and we have incentives to continue to import, and American companies have an incentive to sell their products for cheaper here.
Okay, just 1 second, Matt. I do want to talk to you about macro for a second, but quick question for you: this export credits are not the same as import certificates that we discussed the other day, right?
They're very similar, but they're not the same because the export credits are on a tax rebate, not and they're handed out by the government, and the prices are set by the government, not free trading in a free market like the import certificates.
Okay. All right. UC, I watched the housing video. The prices, I think, are a little bit more iffier than you mentioned on our call the other day. And
What do you mean, the prices of what?
homes, I think the prices are coming down a little bit.
Oh. I think they're still up year over year, aren't they?
No, I think I mean, I kind of try to read into his mood a little bit too. I think because he sees more data than what he shows on those things, and that's why I think after having watched it, I'm like, oh, okay, he's actually thinking a little bit more. And by the way, that video was recorded before mortgage rates surged back up to 7, because earlier in the first couple of days of the absurd tariff table, yields came down quite a bit. They came down to like 3.8%, I think. And he did the video, and then yields surged yesterday by about 4. And last night they were crazy. I mean, I don't know if you watched the price action, but I sometimes wake up in the middle of the night. I open up my X, and all I see is yields 10-year, 30-year surging. And then all of a sudden we hear Besant come out, Neravo or whatever his name is, push back and say, this was Trump's plan all along, which is like completely gave up on the reciprocal tariffs, and they left the 10% base. Now, we are where we are. What do you think will happen to the economy with the 10% base tariffs on all imports into the US?
I think I still expect a lot of macro volatility. Um, I think obviously today was just so much about positioning and sentiment and things like that. So yeah, we rallied, but we rallied back to where we were like 5 days ago. So
Right.
yeah, I just expect kind of like 2022 had elevated levels of volatility. I think we're going to have elevated levels of volatility all year long. And I think we were starting to see cracks and stuff like that show up in the last few days, and so that's why I think Trump ultimately caved, or whatever you want to call it. That's why there's a change, is because that stuff last night in the bond market was crazy. And
Crazy. Yeah.
what do you make of talking housing? What do you make of purchase application data? I don't know if I want to say surging, but definitely it was a high water mark today that got released.
I think it's kind of just bouncing around in the bottom, you know. And again, this was before the mortgage rate surged back to 7. So even at like low 6s, there's no pickup in housing demand. But the sellers are coming to market. So
Wasn't this? I think that the data yeah, they said purchase activity is up 24% year over year.
that's refi. I think that's refi.
No, that's purchase activity. Refi, that maybe includes refi as well. It says purchase activity is up 38% from the lows, and this Bill McBride in October 2023, and is 14% above the lowest levels during the housing bust.
Gotcha. Okay, so from the low, it's up 20%. Well, I mean, you can't go from 100 to 10, and if you go to 12, that's up from 20% from the bottom, and that's what happened. They went down by a lot, and it's kind of bouncing around at the bottom, and I don't see that changing anytime soon.
Yeah, I think it's. I need to check it, but I think it's like the third best reading in 18 months.
Mm-hmm. Yeah.
So, and that's with, I mean, that's with yields not getting below 6%, either there, or what, maybe 6.25, 6.5, depending on where you're getting the loan from. So, we'll see if any of this stuff. I would expect it to kind of soften a little bit with mortgage rates spiking back up to where they were before, but it's not like people would immediately jump to purchase a house if yields move just like a little bit in a few days. Like a lot of this stuff has been planned and things like that. So, yeah.
I mean, we can make a coffee bet if you want. What do you want to make a coffee bet on?
Purchase apps. I don't know. I think they'll continue to stay strong. Like I don't think they're going to go back to the bottom that they were before.
Yeah, I don't think they're going to go back to the bottom they were before, but I think they're going to stay about here. They're never going to make it to halfway where they were before. Half of what they were before, basically. So let me see purchase activity. So if you pull up Bill McBride's graph, at farms minutes, inflation was likely to be boosted this year. Man, it's so crazy. I was looking at this morning. I'm like, people are like 50-50 chance of a May cut. I'm like, are you fucking kidding me? There's no way they're gonna do that. And then after this news today, there's zero chance.
Do you think with the bond market reacting the way it did last night that they would have cut though? Like before this news, I would have said, based on just what
No,
happened to the bond market.
I don't think they were gonna. I think it was too soon. Too soon. I don't think they're really close to it. I mean, a lot of people are talking about it because they want the Fed to cut, but I don't think the Fed was even close to cutting.
Has anything changed on your macro view based on any news in the last 24 hours, either the
No,
bond market
because
or?
when we discussed, we assumed 10% would stay and the rest would go away. Right. So we assume exactly what would happen, basically.
Yeah. So I think we're kind of in agreement that it sounds like I'm maybe not quite as bearish. Like you're, I think, more in the recession camp, and I'm in the I expect
Slowdown.
slowdown, market volatility, big swings in the market. I don't think this is the last 5% plus move that we've had in the market this year. So
Yeah.
um,
So purchase mortgage activity was at 350,000 at the peak of late 2020. And it came down all the way to 150,000. So 250. Do you think we get there this year?
no, I don't think we get to 250, but I think we'll eclipse. Like last summer, for example, it was in like the 140 range. Housing Wire has a good chart on this that I can screenshot it and share if you want.
Do you think we get to 200 this year?
Yeah, I think we'll be between 180. Like we're almost at 180, so I expect between 180 and 200, which is well above where we were at the last 2 years. So
Mhm.
I think that just goes to show that there's continues to be demand there, even though rates are mostly kind of the same that they've been the last year or two.
Mhm.
What do you expect to happen for on the because this is kind of measuring the demand side of the equation. What do you expect to happen on the demand side?
I think it's unlikely that red line goes above 200, which is the 4-week average. You might get a 1 week or two here and there, but I don't think. I think the people are hurting, man. I think most people are hurting, and they're not in a good situation financially.
Last year, it didn't get above. I don't think it really got above one. I think 1 week or 2 weeks it got above 160,
Mhm.
and we're at like 170 now. So, and a
Mhm.
lot of last year, it looks like it was right around 140 to 150. So, if we're in the 170 range, I think that'll continue to put a floor on prices because the purchase application data shows that there's demand there.
Mhm. Okay. Do you want to predict what will happen with China?
Yeah, I think there'll be. I expect continued permanent tariffs on China, kind of like what there was in 2016 and 2020 during both Biden and Trump's first administration. And I think they'll get a little bit more. I think they'll get a little tougher. So if I don't know what the effective tariff rate it was on China goods by year, but I think it's going to be higher than what it was before. But it's not going to be like this 104 or 125%. I don't think they're going to negotiate it something lower, like maybe 50 or 30 or something like that.
Mm-hmm.
Do you know what like I'm not aware of what the average tariff rate on all the goods was, let's say 6 months ago.
2%.
That across all goods is just 2%.
Mm-hmm. Yep.
Well, then how come Tesla didn't export vehicles into the United States?
Oh no, these are imports into US. Tariffs on imports into US. Oh, you're saying how come Tesla didn't export from China to US?
Correct. Yeah.
Oh no, this is again like 2% is average tariff rate on all goods, not just from China, imported into US. And I think importing from China to US has some, political implications as well. So, and I know, as we know, Elon doesn't want to do kind of ship cars from across the continent to another continent and everything. So, um,
It was a lot higher than 2%. Because you said that's from all countries, not just China, right?
yeah,
I thought
no,
I
it's
thought
very
like
lot.
I thought vehicles, for example, was like 50% 6 months ago.
You mean what do you mean? Vehicles 50% from where to where?
From China to the United States. Like they weren't 2%
Well,
before all this.
they're not being imported, right?
No, but if they were, that's what the tariff rate would be.
I know, but the tariff rate is on goods imported. Does that make sense?
No, I'm not understanding what you're saying.
Okay. So the so I guess so if a good is imported from like today, it's being imported. We're getting some sort of clothing from China, let's say, into the US. and everything else that's imported from China and other countries into the US, the average tariff rate on those goods is 2%. If there's a good that's like, if imported, it would have been 50%. So therefore, the businesses aren't importing it. That's not included in my 2%. Does that make sense?
Yeah, I found what I was looking for. So Biden last year increased tariffs to 100% for electric vehicles from China. So that's what the tariff rate was before. So what my point was is that the average tariff rate of China goods was well above 2% before all this tariff talk started in the last 3 weeks or 2 months.
I don't know. I don't know.
So I'm not communicating this very well. My whole point was that I think there's going to be higher tariff rates on China. I don't think there's going to be 100% tariffs or 125% tariffs or anything like that, but it will be higher than what they had been last year.
Mm-hmm. How much money do you think they're going to raise after these tariff wars?
Well, they said they were doing $2 billion a day, so probably 100 or 200 billion, I'd say. Not a ton, but maybe a couple hundred billion, I'd say.
Yeah, and the budget deficit right now is annualized 2.2 trillion. So let's say they do 100 to 200 billion. So we're back to 2 trillion budget deficit. How are they going to pass these tax cuts? Doge was obviously a failure, didn't do anything. So how are they going to pass it to 2 trillion?
They're just going to raise the debt ceiling. I don't think Republicans. There's maybe a couple people like Thomas Massey that truly have incentives or have stated they truly want a balanced budget. I don't think most Republicans honestly want a balanced budget because you have to go after.
Forget balancing the budget. Are you going to be able to reduce this deficit?
Oh no, I don't think so either. Especially if the economy is not booming this year. Like I don't think the deficit will get below $1 trillion.
Okay.
I don't even know if it'll get below $1.5 trillion this year.
What do you think happens to the 10-year yield in the coming months here?
Knowing what Trump did, I think they're going higher. My belief that we get to a 5% 10-year is stronger than what it was before. So that's where I have a couple conflicting beliefs. Like I think the 10-year is going higher, but at the same time, I still expect housing to stay firm. So one of those two things has to be wrong, right? Like if we have a 10% 10-year, or if we have a 5% 10-year, I think housing demand would slow down again. But I just don't know the timing of that.
I can't wait to see his next video.
His what?
Next video.
I don't think it's going to show up in the data that fast.
But his mood will change, and you'll see it.
You're reading the tea leaves. It sounds like so.
It's just so fun to watch him, you know. But anyway, okay. So I agree with you. I think the probability of 5% 10-year yield is now higher than it was when we made the bet. What was it? Like a year ago? A year and a half ago? Something like that. The 30-year hit 5% last night. Did you see that?
Yeah, and I think
that's wild.
Especially when, like, if they pass more of the tax cuts and the budget never really gets below $1.5 trillion this year, I think they'll probably pivot to say we need to like continue to use tariffs and try to grow the economy out of this budget deficit. I think is what the argument's going to change to, but it'll be interesting to see what it looks like when they have to refinance a bunch of that debt and things like that. I was listening to a space this morning, and even Bill was really bearish. So I knew sentiment was really washed out when Bill was even talking bearishness this morning before market opened.
Yeah, he was in spaces all weekend. Do you know who he is?
No, I have no idea.
Yeah, I don't know either. I don't think anyone knows.
He understands the plumbing really well, though. So I'll be interested to hear.
Does he though? Does he? I don't know. I don't think he's as good as much credit he gets. And he knows some things. He knows some things, but his predictions have been wrong.
Yeah, but I feel like his most recent prediction when he was talking about once the debt stuff got pushed out earlier this year that we'd see rates fall. I thought he tweeted that towards the end of January, and he's been pretty right about that.
Yeah, he's been right about that. Yes, he knows plumbing, like you said, especially on the fiscal side. He knows plumbing. I agree with you. Okay, but he also predicted that the mortgage rates would drop, and he would post as they drop day after day after day after day after day. And now that they're going up, we don't see a post, and that's a huge red flag, right? When people do that, when they're only one-sided, that's a huge red flag as far as I'm concerned about their biases.
So to summarize, not much has changed as far as like your expectations of stuff.
No, because we assumed 10% would stay, the rest would go away. And that, I mean, we have the
And-
recording, you can listen to it.
Yeah,
Just
and
like
what do you expect for China?
China is an interesting case. I think that it can go to a war, like not just a tariff war. I think it can go to a war. What do you think?
Yeah, I said the same thing, that I thought anytime you put protection measures in place, I think that I think the chance of war increases, because if you have a really global economy with no tariffs and lots of free trade, countries' incentives to shoot their neighbors goes down a lot when they realize that they're importing a lot of goods from those countries. But if, let's say, in 18 months, the United States is importing a lot less from China than they were before, let's say there's like some miracle that they shifted some supply chains, not to the United States, but to other countries that have lower tariffs, suddenly I think the United States has a lot less incentive to be worried about anything like war or anything like that, which I'm even hesitant to say, because I don't nobody likes war and nothing good comes from that. But China invading Taiwan, things like that would could become scarier.
Mm-hmm.
I'd say all else equal, I don't think there's a more than 50% chance that it happens, but maybe the chance went from 2 to 5% or something like that.
Yeah. Yep. And do you think China targets Tesla at all? I mean, I guess they would be hurting their own citizens that work in those factories, and Tesla Shanghai factory doesn't make money anyway. So
That was a pretty crazy move in Tesla though today. I think that's what, second best all time.
yeah, sure. I mean, it's across the board. All the meme stocks surged 10, 20, 30, 40% today. So it's not that surprising. I mean, we saw a preview of that the other day when they leaked out, and then they denied that there would be a 90-day pause, and then did it anyway. So
Yeah, that was part of the reason that I was surprised at how bearish everybody was staying. Just, I mean, you saw the market had this desire to pop and is just looking for really any reason. Everybody was kind of holding on.
I know, but the thing is, like, if Rivian is worth 0, even if there's a short squeeze every now and then, doesn't mean it's not worth 0, right?
Yeah, for sure. I see your point, but still, when sentiment just gets so one-sided, I feel like those are the easier trades to make.
Did you?
Um, yeah, I won't go into details, but yeah, it was a pretty crazy day today.
Okay. Rivian is up 9%. $13 billion company. Amazing.
So I guess now that this is settled, at least on the Tesla side of things, things will probably go back to earnings estimates. I need to jump in a few minutes, but what's your early estimate? Do you think Tesla loses money in the first quarter, or lost? Should I say, do you think they lost money in the first quarter this year when they report results in a couple of weeks?
Yeah, I think they did.
You want to make a coffee bet on that?
Um,
And I'll give you either basis, either gap or non-gap.
It doesn't matter. It doesn't matter, right? Because they're not paying their CEO.
Oh,
They're not
so
paying. There is no CEO compensation.
so do you think they lost money in the first quarter or no?
Yeah, I think they did. Yeah,
Okay,
gap basis.
but you don't want to make a coffee bet on it?
I mean, I haven't really looked at it that much. I think they
Oh
will lose
gosh,
billions of dollars, but
you had these strike things with Meta. Where's he at to witness this? The earnings will be low, but I don't think they didn't lose money in the first quarter.
what gives you
I'm-
so much confidence?
Regulatory credit sales. Those will still be strong. And so I expect the narrative to shift back to, if you strip all this stuff out of the earnings, they were actually bad. So I expect them to be not great already. But if I wouldn't be surprised if they're just profitable based on like a credit sale or something like that. So if they have $600 or $800 million of credit sales and they post a $400 million profit, I fully expect you to say Tesla's not profitable.
I mean, do you disagree with that statement?
No, I've always thought about creating a Twitter account for that tweets bullish and bearish stuff, because I mean you can kind of predict what the bulls are going to say. If they make a profit, they'll say Tesla still made money even though they shipped or delivered 100,000 cars fewer. It's not the end of the world. They're still making money in a tough macro environment. And then the bears are going to say, well, yeah, if you the PE is probably going to increase after this first quarter, so you'll go from 110 PE to 150 PE. So
so the expectation is that they're going to get about 30 to 36 cents on the dollar.
what's that translate to? I mean, is that less than $1 billion?
Yeah, I think so. Yeah, it's about $1 billion.
3.2 billion shares outstanding. So yeah, roughly $1 billion is what they're expecting.
What are you expecting?
Yeah, somewhere in there. 800 million probably is what my expectation would be.
Well, I'll take 800 million as a break.
No, you said no. You said Tesla won't make any money. I said, will Tesla be profitable in Q1? You said no. And then I said, okay, let's do a coffee bet on it. And then you said, nah, I changed my mind.
I don't think I should change my mind. I just
You did. You did in your head.
I'm not as happy triggered these days with coffee bets, because I know those. I don't think I've lost one. You know why? Actually. But yeah, we can. I mean, we can just do it. That's fine. You're just for good old times.
I don't care that
times
much.
Sake. Oh, wait a second. You don't want to make one?
No, I don't. I don't need to steal your money.
Oh my god! Oh my god! Where is the strike? Where is your strike? No, on the gap basis, I'll make you a bet if you want to make a bet. That's fine.
Yeah, sure. Why not?
You want to?
No, I don't care. I know they're gonna make money. I need to give you odds. I need to give you like 5-1 odds or something like that.
No, last 5 minutes should go on the Hall of Coffee Bets, Hall of Fame for coffee bets. Last 5 minutes of this clip. They're funny. Yeah, they're gonna lose money. They're gonna lose money this year. They're gonna lose money next year. They're gonna lose money this quarter. There's no turning away from that. It has nothing to do with Elon. Has not. I mean, I guess it has something to do with Elon, but it has nothing to do with tariffs. Competition is just so good, man. Things have changed.
I guess maybe the last thing I'll say is there's I think her name is Helene. She posts like charts on Twitter and stuff, and she has a pinned tweet that says nothing changes sentiment like price. And it'll be interesting to see what sentiment looks like over the next few days. But obviously, even in just a few short hours, there's a lot of bullish sentiment everywhere. So it's interesting how obviously the tariffs changed that, but also seeing the markets rally 10%, I think gave a lot of renewed optimism for everybody. So we'll have to see what the markets look like over the next 3-4 weeks. See what purchase application data looks like over the next couple of weeks. Probably what I'm going to be watching. What about you? What are you going to be watching the next couple of weeks?
Nothing. I'm just kind of sitting on my hands. I think next couple of weeks, yeah, earnings, obviously, commentary from earnings that comes out. I think we're going to see a lot of companies pull their guidance. Next couple of weeks, I guess we have the we have inflation coming out tomorrow. And right, what do you expect for that CPI?
I think it's gonna be similar to the jobs data. I don't think it's gonna matter. I think the market's gonna overlook it one way or another. So I don't really put much stock into that.
Mm-hmm. What do you think is the probability of a Fed cut in May?
5% now.
Mm-hmm. What do you think it was before today's announcement?
50-50.
Really? So you agree with the market on that?
Yeah. I was almost aligned when you pulled that chart up a couple days ago when we last
Mhm.
spoke of expectations, because I thought I really think if those tariffs would have stayed in place across the board, you would have started seeing companies like they would have done. I don't know if they would have done layoffs, but there would have been a freeze on a lot of stuff immediately. And yeah, I think the market would have continued to fall apart because the market wasn't pricing in that the tariffs would stay. I don't know if they were necessarily pricing in that they'd be completely removed or that the action today, like the market was maybe a little surprised by that. But if nothing would have happened, I think the market would have continued to deteriorate. And so the Fed would have been forced to cut.
I don't think they would have been forced to cut. I think they might have done something with QE and stuff. But yeah, there's a lot of programs in place these days. It's not like a lot of people make the mistake of, oh, they did this and they're gonna have to do the same again. Well, the world has changed in many ways, you know. I don't think they were even thinking about cutting. But anyway, so inflation, they're gonna look through. You're saying, I don't know if that's gonna happen.
What's your expectations?
I think the year-over-year inflation rate is still a problem. Right now, the forecast for year-over-year inflation for tomorrow is 2.5% CPI, 3% core CPI, and then that doesn't change next month. And that's before the tariffs. But I think what people don't realize is demand has vanished from Tesla. There's no demand for any of the vehicles, really. And that has nothing to do with tariffs, has nothing to do with Trump, has nothing to do with Tesla takedown, maybe a little bit. Okay. But it's not material. And everything to do with, well, I'm not going to say. How about that? Stay short, my friends. And I will back with you all next time. Take care.